And welcome back to another live. I'm here with my really good friend and biz partner, Stephanie Howland. She works for the Crane Wind team here in Phoenix, and it's like literally one of the top teams in all of the Valley. And so she's come to be like my co-chair today. Did I say what is that? Co-host. There we go. And answering all of your guys' questions. Last week I did get some feedback about not being able to get to questions, so I'm gonna do my very, very best. But if I miss your question, guys, just keep posting them. Okay, so just keep posting them. Just want to give you guys a really quick rundown of what's going on in the marketplace. And so while I'm doing this, guys, if you want to get your questions in there, we'll answer them. We had lots of numbers today. So interest rate market, guys, is a little bit funky. One, because we can't tell the health of the economy. So Friday should have been a really wonderful day for interest rates because we got like that crazy jobs report. They were expecting 700,000 jobs and we got close to 300,000, which is a humongous miss. So when we show economic numbers saying that, hey, we're not creating enough jobs, that typically does not bode well for a strong economy. And typically we would see that interest rates would go down. But what ended up also happening on that day is that we got new inflation numbers, and inflation is just always going to trump unemployment. It's always going to trump. So if we feel that the economy is outgrowing, the price of goods is outgrowing, wages are outpacing, they're just going to start tapering mortgage-backed securities, tapering their asset purchases, because we do not want that to get out of hand. So we've seen a lot of mixed data. And so, so just so you guys know, like, I think stocks ended the day lower, mortgage bonds were higher. But when we're going to see that up and down, I think for the next couple of weeks, and I wouldn't be surprised if now that all of the unemployment, money that people were getting because of, COVID, now that that's gone away, all that stimulus, I think we're going to see even greater unemployment numbers, because a lot of those people that were getting benefits aren't being included in those numbers. So it's going to be crazy. But my best professional opinion is that interest rates are going to be rising, and we don't know how long you can keep rolling the dice expecting like an interest rate in the 2%. So if now is your time to buy, I would pull the trigger, because I do not think that homes are going to be any more affordable. That being said, we actually got the Core Logic report on values of homes, and so just so you guys know, we're up 18% year over year nationally, and there's lots of people who are tuning in from all places in the country. Phoenix, guys, is up 30%. Okay, we lead the nation in appreciation. And what's interesting about it is a lot of these economic reports are saying that, they only expect, modest appreciation, anywhere between 1% and 3%, which is interesting considering that we're in double-digit appreciation. Now, that is very healthy, and it's unhealthy to see 30% appreciation. So nobody really, even us, like realtor and lender, we don't want to see home prices continue to accelerate at this, and they don't expect that. But they did also say that they think it's going to be 5 to 10 years before we have fixed our supply problem. So if you're expecting home prices to come down, guys, we're probably going to see less competition in the future and home appreciation get under control. But I don't think that home values, the prices today, are going down. Okay, no, none of the economic reports say that. None of the experts say that. So that is your market update for the week. Anything to add on that?
No, I just agree. I absolutely agree with the fact that I don't think that the housing market is going to suddenly crash with pricing either. Absolutely not.
No. And we've said this before, guys, like seriously, there would have to be something that happens that, makes people decide to dump their properties in a foreclosure when they have more than 30% equity. So not likely. Alrighty, guys. So let's answer some of these questions. Let's say hi to Miguel. Thanks for tuning in. Hi, Jen. Hi, Rasimi. Hi, Aaron. Aaron, nice to see you back. NJNP, Kenneth, Zeke. Zeke's my man behind the scenes, guys. We have Rochelle, Mocha, Rachel, Devin, what up, dude? Theo B, Gons Fam Bam, Steven, nice to see you back. Rod. Okay. And super fun. Looks like Kyle popped in to give us a shout out. Kyle from Win the House You Love is like everyone's favorite YouTuber aside from my good friend Javier. So, and then Lisa's back. All right. So let's see, what do we got here? Been waiting to buy. Have prices dropped enough now? I definitely think competition has gone down. Just to guys give you some feedback or some perspective here. God, I don't know why I'm jumbling all my words today. But a seller's market back in the old days of seller's market was like 97% of list price, and it got up to 104% of list price, which is kind of bananas. So I definitely think that you're not going to be paying 104% of what something is worth right now, but I definitely think that it's still very, very competitive, guys. What are you seeing out there?
Yeah, so absolutely. What I'm seeing, though, is that still in the 350 and under price point, we're still having a lot of competition. So I am seeing the homes go over still. And then,
but like, what's common? Like,
yeah.
if like a home is priced under 350, are they seeing like 4 to 5 different offers on a house? Are they seeing 20? Because it was like upwards of 60 at one point.
Right, absolutely. So no, we're like at 14, maybe 12. 14. So quite a bit different. But they are still going over a little bit in that price point. But other than that, I feel like they've calmed down quite a bit. Even in the luxury homes as well. The
Awesome.
competition is a lot less.
Oh, lots of people tuning in from the East Coast, Jersey and New York, guys. It's late where you're at. I appreciate you guys tuning in. Okay, so Devin Cahill says, why couldn't SpongeBob get a mortgage? Because his house was underwater. Oh my God, can I just tell you, I love that joke. I love that joke, and I'm going to now use it in my sales jargon. Let's see. Okay, so Theo B says, are there closing costs associated with a VA IRRRL? So generally speaking, those types of closing costs are typically built into the interest rate. There are closing costs whenever you guys do a refinance. And there is the VA funding fee that you have to anticipate whenever you are streamlining your loans. Same thing for FHA loans. So you definitely want to think about that every time you refinance. There's lots of companies out there pushing $50 to $100 savings when you do refinances. And you really have to look at the overall cost of how long you're going to have the mortgage and when does it break even. So yes, no money out of pocket. Yes, a lot of times you can save a decent amount of money with that. But yes, it still costs you money. Like none of these loans are for free. All right. Let's see. So Mocha Sista says, what's the housing market like over there? I'm in AZ and it's wild. Well, it's wild here. I guess that wasn't a question for me. And I said, never mind. I'm in AZ and it is wild here. Okay. I thought it was because his burger flipping job didn't meet the required DTI. Oh my God, story of my life. Poor SpongeBob. Rod and Laura, nice to see you. Okay, so question is, if my lawyer asks for an extension, but I don't get clear to close by the max date we got the extension until 9/15, what can happen? So that's a definite good question for your attorney. Unfortunately, every single state is different when it comes to the purchase contract. If you're watching here in Arizona, we use an escrow company and agents actually act as your legal fiduciary. So in Arizona, the contract is written very buyer friendly, right?
Absolutely. Yeah.
And so you get like a 3-day notice to fix whatever your item is. So let's say you haven't gotten your clear to close, they would issue a cure. You'd have 3 days to get your clear to close, right? But oftentimes I really generally think with good communication, extensions aren't necessarily a big problem. When do you find that you find like an extension is like a, oh my God, issue?
Only if really the other people are contingent on some other property, some kind of domino effect. But most of the time we're seeing a lot of people are doing extensions if they need to. It's not a problem. As long as you have, like you said, communication with both agents going back and forth, that's really key in the situation.
So when I find that people freak out about a close of escrow extension, it's typically because they're finding out at the last minute and not like, a week to 2 weeks ahead of time when they had time to prepare. And generally speaking, they don't have enough information to make an informed decision. Like they hear that you have an issue with your loan and then they're not hearing like, is the issue like remediable? Like, so for instance, today, I thought I was going to get a clear to close on a file and I didn't. They conditioned me for one extra item. I called the listing agent. I said, look, the item is minor, but we need it in order to sell the loan. I've already spoken to the employer. The employer guarantees that I'll have it in the morning, but it looks like it's going to bump our close of escrow day, right? So it's that kind of communication that eliminates some stress. So I would already be speaking to your attorney. They're going to need to know how much time. Is it an issue? And I know when you've been on this live before, you had a debt to income ratio problem. Have you worked that out yet? Did you find a better loan team? All right. So is there a way, to raise the volume higher? Zeke, can you raise the volume higher? Don't you love how I just like read the questions? I have no idea what you're going to say. And then some of this stuff makes me sound so dumb. Okay. So let's see. Finally, my first time catching you live. Thanks, Lizzie, for giving us all the advice and tips for this crazy market. Thanks, Itza. I appreciate you. Unrelated, that color looks great on me. Oh, thanks, honey. So this is a fall trend, just so you guys know. Rust is going to be really in for fall trends. I read that somewhere.
I love it. I love it.
No, I did. Did you not read that? I was like,
no, I just love rust.
It's like the new trend color. All right. Oh, Karen Pham. Yay. So she is a brand new team member on my team, guys. I absolutely love her. And I'm super excited that she's working with us and tuning in. All right, so let's see. So Mocha Sister is actually giving us an update on what it's like. She's paying $1,600 for a 1-bedroom house right now. Yikes! And let's see. The houses by me are very expensive, like $500,000. Okay, so to kind of put this into perspective, guys, believe it or not, like you could probably get a mortgage payment that has multiple like on a house that has multiple bedrooms, more than one, and actually end up paying less in your percentage, right, than what you're paying for that 1-bedroom single apartment, right? So lots of people buy homes. Let's say they're buying at $400,000. They have a decent down payment. Their payment's going to be somewhere between $1,800 and $2,200. If they rented out all of the rooms, they'd probably be paying less than they would for rent right now. So another thing to consider, especially in you're an area where like maybe you can qualify, but you're not 100% comfortable, making the mortgage payment by yourself. Think of that house hack. There is a really great set of people. They're called the CT Brothers on Instagram. They have bought 5 different houses, house hacked this way, literally lived for free, and now own a business doing Airbnb rentals. And so they share all of that information online, and they're definitely people to check out. All right, so let's see here. What do you think about house hacking, out of curiosity?
Honestly, I don't know much about it.
So a lot of it is like, where, and this is like a suggestion. So I've been giving lots of people. So a lot of people they're having issues affording a house in this market. Mm-hmm. But if they go in with family members or they go in with friends, they can actually increase their budget. Okay. And so it's a way of like still being a property owner, mm-hmm. but splitting the cost, offsetting the cost with like renters or a family member. I have literally one set of clients that bought a main house and it has a casita in the back, and the parents are living there. They're helping them qualify for the home, but parents live in the casita and family lives in the main house. So
yeah, we're doing that all the time. I just didn't know there was a name for it.
Yeah, it's called house hacking.
House hacking. Okay.
Yeah, I'm such a millennial, guys. Let's see. So Rachel says, what would a typical pre-approval letter in this crazy market? My agent is telling me one thing and the bank I was working with says something else. Oh my God, guys. This is going to be specific per like state and truthfully per bank. So some letters you can like literally apply online and print out your approval letter. Those things really hold very little weight in a market like today's, especially in Arizona where they have a very specific form that you have to use. So a lot of those internet banks like a Better Mortgage or Discover Home Loans or, USAA, a lot of times people will lose their offers, quite frankly, because they're working with a company that can't provide this document. And so you want something that shows, one, that you've had your automated underwriting approved, that they have verified all your income and assets, and that you are a super strong buyer. And then if you're really having a hard time, I would get your loan officers to start making sales calls for you. I call on so many of my clients' behalves, and like literally this weekend, I know of 4 offers that was accepted because the agent and I were so aggressive on communicating with the listing agent. So I added my 2 cents to that, but like, there's that.
I love it.
What do you see when you get like those rando approval letters?
Oh, well, first of all, here you can't even use it if it's just a random approval letter. Like in the contract, you have to have the Arizona pre-qualification form with it to even submit the offer. So as on the listing side of things, I kind of can't even really present that at that point unless my client has,
So let's talk about that, right?
Yeah.
So she does quite a few listings. So like when you're getting an offer in this marketplace, what are the types of offers that really stand out to you? Like what should these people know and educate their realtors with?
So one thing we still, in this market, it's here in Arizona. First of all, let's back up the bus a little bit. It's a seller's market, as we know. So you're going to want to have your offer be very clean. And what I mean by that is most of the time we're going to not want to ask for a home warranty to be paid for by the seller. We're not going to want to ask for the appraisal to be paid for by the seller. We're not going to want to, rock the boat a lot during inspections unless it's something major. Truthfully, it's the art of getting your offer accepted to begin with. And so some of those things can be written in. Like Lizzie said, we do practice real estate law here in Arizona as your agent. And so, they can write in on page 8 many different tactics and things to get your offer to the top. So
a lot of things so a client might come to me and they're going, God, I really don't feel comfortable waiving my inspection period, or I really don't feel comfortable bidding over asking price. I don't want to do an appraisal waiver. And a lot of times what I'm telling people is, you have to look at this as an investment. Right? So sometimes you buy a stock price, like let's say Amazon, and we're buying it right now at a price where it's not even profitable, right? So technically we're overpaying for something that we believe is going to go up in value based on all the information that we have, right? Real estate, we're talking about at a minimum a 1 to 3%, overall investment on the total price of your house and not just your cash investment. And so a lot of times, I tell people, you have to think about what you're looking for in terms of a return. One, you have to live somewhere. Okay, so you're going to be paying rent somewhere. And two, what would that money be doing for you elsewhere? And so those are the things to really consider. And so when you're making a decision to, maybe pay for some of the repairs that you would normally have asked the seller for, or maybe you're going to bid $5,000 over what the house is maybe worth today. What is that house going to be worth a year from now? $5,000 on a $400,000 house right now is basically nothing. You're almost guaranteed to have that return by next year. So when they're talking about clean offers, they're saying, hey, offer at minimum ask price, right? Try to make sure that you're doing a 30-day close of escrow, and don't make them guess on whether or not you're approved for your home loan.
Correct.
All right. So Aaron got his first house closing on the 28th. Woo! Congratulations, Aaron. I'm so pumped to see that. So Itza says, how can I stand out with an FHA loan? She offered $10,000 over, but the seller went with somebody who was conventional. You guys, this is for real an issue, and it's impacting veterans, it's impacting first-time home buyers, and honestly, it really pisses me off. So, but you gotta deal with psychology here. So she's a listing agent, so I'm gonna ask you a question. Okay, so if you were to get a letter, and I know that not every seller accepts these letters, but a letter that talks about that specific house and why this client liked the house, would it mean something to you?
Absolutely.
Okay.
Yeah.
Right. It shows them, one, that you are interested in their specific house. Lots of times conventional buyers, investors, they're not that personally invested. Sometimes they haven't even seen the property. So letting the seller know for sure you've seen the property, huge step. Okay. Number two is providing proof of funds. Okay. So you offered $10,000 over, but did you provide a bank statement that showed them that you have the $10,000 to back it up? Okay. So this is one way that our FHA buyers have some skin in the game, more so than conventional buyers, because I can tell you that most realtors aren't asking for that. Would that stand out to you?
Oh yeah, absolutely. We just got an offer accepted with an FHA loan for that reason. The listing agent, when I was talking to him, we said that he said they went over or with an appraisal gap waiver, and I asked him, did you get proof of funds for that? And he said no. So. And that was just on the buy side. But on the listing side, if I saw that, yeah, that stands out a lot.
So one thing that she just did tactically, guys, is she went and asked additional questions. So a lot of this is when you're working with FHA financing, you've got to work with an agent who knows how to get the information and sell your deal, right? So what she's doing is she's creating insecurity with that other offer, right? So, hey, have they actually proven that to you? Because I have a qualified client right now with proof of funds in hand, right? Remember that saying, a bird in the hand is worth more than two in the bush? Okay, so we're using that psychology to work for us, right? So a good strong letter about what you liked about their specific property, build some rapport there, some connection, proof of funds, and then having your loan officer either write you a letter and go to bat for you with a phone call, or at minimum, just respond to an email, just selling the strength of your loan package. Being able to close in under 30 days is huge. And then if you have the ability to have your lender submit your loan in underwriting before you find a property, a conditional loan approval holds way more weight than a pre-qualification. The reason that people do not like FHA and VA buyers, it is because of bad mindsets from things of the past. They think they're going to ask for more repairs. They think your appraisals aren't going to come in, and they think you have no money. So if you can disprove all of that, you can get your offer accepted.
Absolutely. Yeah.
All right. Guys, I'm running super behind on questions, and now all of these things have just populated. Hold on. I'm finding my way. Okay, so I'm confused with how rental income affects DTI calculations and borrowing for future properties. Okay, so here's the deal with investment rental income. So it used to be that we were able to use the additional income to help you qualify with just a lease agreement. And because of everything that happened with COVID and all of these people losing rents, they've actually no longer allow that. And the maximum that we can do is just offset the mortgage payment, but we can't include any of the rental income. And honestly, guys, this is just the safest way to be because we know that many people are out of work and rental income is not guaranteed. Now, if you are an investor and you've had the rental property on your taxes for at least one tax year, then we can start using the income. We can even support it with higher income with a lease agreement. And so I will tell you that it is a little bit more challenging now, but many people still get qualified with their move up homes retaining their properties, right? Using a lease agreement to help them at least offset the payment. So I hope that helped answer your questions. Okay, so would it be better off just to hold off until 2022? I'm looking at a co-op apartment or a condo. How hard is it to get financing while relocating? You know, here's the deal. I mean, in this marketplace, like I will tell you that the average turn time right now is 290 days. So we're talking about like 6 to 9 months. I know that there are some cases where people are finding property right away, but if you have any kind of obstacles like, you know, relocation, you might as well get started sooner than later. One of the things that you're going to have to be prepared with is letting them know like where you're getting a job. Right? A lender is going to want to know that you have an employment letter or a job that's secured with a start date and a pay rate. You'll want to close within like 30, as some lenders do 60 days from your first payment date. So you just want to make sure that like all of those ducks are in a row for the lender. Now, sometimes people are like, but I don't want to look for a job until I get there. That doesn't really work that way. Yes, people can get through it. They like qualify as a second home or an investment property, but you are signing documents verifying your occupancy at close. So what would you give for people that are relocating because you deal with lots of out-of-state clients?
Yeah, so I would definitely say get started earlier, sooner the better. As far as, I'm sorry, Lizzie.
So like, what are your best tips? So like, let's say somebody's moving from like New Jersey, right,
Yeah.
to Arizona.
Mm-hmm.
Like, what would you tell them? Like, one, they probably don't know the area.
Right. So you definitely want a real estate agent who knows the areas and knows what you're looking for. You need to have like a consult with them and be able to hone in on what you're looking for so that they have a really good idea, because you're going to be doing a lot of probably virtual tours. At least that's what I do. So that you can not be there, but be there at the same time. There are a lot of agents out there who have handed keys that the person has never even seen the home before they walk into it with the keys. So.
And so what does that entail? Does that entail you like driving the area and doing like a
I do,
video?
yeah. Yeah, so I'll drive the area, I'll drive in with them so that they're live with me. And then as far as the home is concerned, you know, I get up in there and I'm like, because I don't want to be liable. So I'm like, I want to make sure they see everything that they need to see. You know, if the cabinets are cracked, we're going to look at those. And I think that most agents will go to those lengths as well.
So one of the things that you mentioned is a co-op and condo. So there are agents also that specialize in those types of properties, and you're definitely going to want to work with an agent that really understands that, because financing is tricky on those types of properties, and a lender and a realtor that do not specialize in that will put you in an awful situation. So condos are not super prevalent in Phoenix, but they are our most affordable housing product right now. And there are condos that do not qualify for financing or do not qualify for all types of financing due to investor concentration. And so if you work with an agent that does not specialize in condos or doesn't know anything about that, I have, found myself in a situation where my buyer is fallen in love with something that can't be financed. So definitely for you, one, work with an agent who really understands the type of property that you're buying, a lender that understands the type of property that you're buying. And I would do the due diligence at minimum 6 months in advance. Get your employer locked in, do your property tours, do your, traveling to that area, whatever you need to do. But it is going to take some time, and you might even move here and be in a short-term rental or an Airbnb while this entire thing is happening.
Yeah.
I mean, it's hard to relocate. Right?
It is hard, but with the right assistance, it can be done. So.
Yeah, right assistance. Right. Okay. Cool. Let's see. So, are there programs you can? Oh my goodness, guys. So, like, grandma over here, every time she touches the computer, it like just flips to like 5,000 questions. So I'm just gonna go to like the first one I see. Okay, so is there any way to get my offer accepted? She said I can write a seller's letter. Can the offer to pay their moving costs? Can I bring them dinner? I'm desperate. You know what? I literally have never had that question, Rachel. And that is a really good one, to be honest, because I don't know if there's like actual impacts on what you can offer a seller. So just so you know, I had one situation where like, I know that when a seller is selling like furniture or, property that is theirs, it has to convey at zero value for the loan because that can't have any weight into the property value. But I've never seen it done the other way. Honestly, you really trump me. Next week, I will have an answer to that question. What about you? Have you ever heard that?
No, that's a first for me as well.
But they're offering to pay the seller's moving costs. I mean, I think it's brilliant.
Right,
first and
I
foremost.
do too.
But can you offer them things?
Yeah, I mean, you can. It's tricky though.
We're going to get back to you on that.
Yeah.
Like, that's a good one, and I don't want to say something that's wrong.
I don't either, but I do know that, like, people have offered in the past, like, diamond rings and things like that. But it doesn't.
Up.
Yeah, it does. I know this from a class I took, but I haven't experienced it in real life, so I have to find out, too.
Okay, well, let's save organs and ovaries and stuff for, like, not real estate.
Right.
Oh, my gosh. Okay. Wow. Okay, so Rachel said she's going with a conventional, but sellers or their agents don't like that it was 3% down. This happens again, guys. The less money that you put down, the less qualified that they think you are. So 5% definitely is more common, and people like to see that. Okay. Sorry for another question. No, guys, don't be sorry. Ask away, and definitely repeat your questions because I'm missing so many of them. Sorry, another question. My lender told me not to close any of my credit card accounts. I was kind of startled by the number of accounts my husband had open. How do I get them off my report? Look, if they're open, you want to let them age off of your credit report. That's the most ideal way, because when you close them, automatically you are saying to the credit bureaus you have less amount of available credit to you, and it hurts your overall credit score. So credit is based on how you make your payments, the length of time, and how much you can borrow, right? So how much available credit is available to you, and are you overspending or not? So when you start cutting that dramatically, you actually start eating into your credit scores. Not to mention, those accounts no longer report on a monthly basis in your benefit. So definitely just let them age out. Your loan officer is telling you this so it doesn't impact your credit score. But yes, we find out all kinds of fun things about our spouses every time our credit reports are pulled. I'm so sorry you had to find out this way. Any trends I'm seeing in my field that does not match with what I'm seeing on the mainstream TV? Yes. So like every other week, mainstream TV basically talks about the housing market is either busting, it's a bubble, or now it's like super competitive. And the thing is, I think that there's a lot of alarming headlines. I read one the other day that's like, what's going to happen to renters, affordable housing crisis. And I do think that there is a large percentage of the population that is going to have to figure out living with family. But we did see that in the Great Recession. right? Like all of a sudden people foreclosed on their homes in droves and the rental market went up and people started bunking in together. And we're going to see that. I definitely think it's an issue. I do not think that we're in a housing bubble. I do not think this is comparable to 2008. And I do think that mainstream media has people confused with what the headlines say. Like a couple weeks ago, it was like mortgage applications dropped by 16%. You know, housing values are dropping, and they're really talking about appreciation. You know, it's like, appreciation isn't even realized money, you know. It just drives me so much. So mad.
I love you.
This is Lizzie after hours.
I love
like
it.
make sound effects when I get tired.
I love it.
Okay, so let's see. I'm starting. I got an interest rate at 2.256, APR of 3.3, APR. Is that a good rate? It's an FHA loan. Guys, I think that one, it's a liability to tell you if you got a good interest rate. I will say that rates are historically low right now, and you can look up your interest rates on the Freddie Mac interest rate survey if you Google it, and that will tell you whether or not you're in line with the rest of the country. Abner Guzman says, I'm in the process of buying my first home as a primary residence. How fast do I have to move to my permanent residence? Is there some kind of audit and somebody who investigates if I moved? Oh, man. So, fun story. Yes, they do random audits to make sure that you have moved into your property. You would hate to be the person that did not move into your property, let me tell you. They technically give you 60 days from the day that you sign your note to move into your property. So, I mean, that should be plenty of time. Okay, Abner? So don't try to do one of those things where, like, I was going to live in the property, but really had no intention of living in the property, because if they find out that it's you, that note is due payable. And nobody will want to give you a mortgage if that happens. So then you'll be stuck for that. Trust me. I have seen it happen one time in my life, and it was the saddest thing I've seen. Like, it was like a family. Like, they did this refi. So now I have to go in story time. I have to explain this. It was, like, too weird to, like, just end it on that note. So these people were relocating here from another state. They did a refinance. The loan officer who was helping them did not explain to them that if they did this as a primary residence with the intention to move in 45 days later, that they would be committing loan fraud, because technically they knew that they were moving prior to doing this refinance.
Oh, my gosh.
Right? And when you sign your loan, you're saying, I agree to live in it for 12 months. Okay? I did not know this. When I pre-qualified them, their old mortgage was still reporting on credit. Like, you know, I verified everything. And then they came up on this alert for Fannie Mae. And we had to clear it. And it basically was like, hey, this person just did an owner-occupied financing. And it was just such a mess. And then they wanted to call the note payable. And it was just like, I mean, you guys, it was such a mess. It was such a mess. I've never forgotten it. And literally, it scarred me. So don't do it. Like, you could tell, I'm like, oh my God.
I know you're so passionate about it, but it's
bad.
bad.
So Stephanie was like, do you remember this loan? I'm like, girl, I remember the bad ones. Those are the ones that, like, keep me up at night, that I, like, you know, spend hours on. Everyone else, I'm, like, so grateful I worked with you, and I wish you the absolute best, and I do care about you. But if I'm going to remember your actual loan situation, it's because it was not great. Okay. Oh, yeah, you can. So after closing, I may still need to move to Jersey as I move my furniture and car. I think you have time. So long as it's you're occupying it, there's no lease agreement. If someone goes, hey, who's living there? And they're like, oh, it's Abner, I think you're good. All right. So when you pay off a 30-year-old mortgage, you essentially paid almost double what you borrowed because of interest. So that is true, guys. So the longer you pay a mortgage, the more you pay because of interest. But this is a fun fact that people do not talk about, is that the home stays constant with wherever the value of money is. And so the loan that you have constantly depreciates. You're going to live somewhere. Like, so either you own that property and you paid the rent off, but that house typically is worth, like, so much more than you ended up paying for it when you sell it. So, like, even if you paid double, you're still going to make more money in equity. And it's not like that money was thrown away. You literally get reimbursed when you sell the house. So that's what I'm going to say about that.
Yeah.
I know, there's, like, a bunch of YouTube people who, like, I literally made this video. It's like my least liked video. I had all these people saying how dumb I was because I was like new to YouTube and I was like so afraid to say anything. And it's about these people who believe in this velocity mortgage thing where they get out this line of credit or a HELOC and basically they use that to live on it and they spend all of their funds to pay off their mortgage because they talk about how paying this interest makes no sense.
Okay.
But what they always forget about is that like the average return on anything in the stock market, like an index fund, is somewhere between like 7 to 8%. These are average things that you can look up on the internet. And a mortgage interest rate has been historically around 4% or under. And so even if you paid double, right, for the house, you would have double the returns, quadruple the returns on the investment if you continue to make the mortgage payment.
Right.
And so, like, it's just, yeah, people ask me this question, and I'm always like, yeah. Do I plan on credit hacking by adding my kids as authorized users on credit to help extend their credit history? You know, my children are kind of young, and I haven't really thought about this. I was, like, deciding on this. And actually, good question, because your kids are getting, so she has a 15-year-old. I know it doesn't look like it, but she does have a 15-year-old. And so, I don't know. So essentially what he means, guys, is that you can add somebody as an authorized user to your credit accounts, and they will get all of the credit history that you have within 30 to 45 days whenever that creditor reports. And this is a really great way to boost somebody's credit score. Not every bank reports them. Not every credit bureau acknowledges them. So it isn't like 100% foolproof plan, but it is a pretty good way to give somebody a leg up if you have good credit. I don't know. I don't know how I feel about that yet. My kids are like 8, 6, and 3, so I've got some time, but I don't know. I feel like the struggle was worth it for me.
I think you learn a lot when you apply yourself and get your own credit built up. Like, I don't know. I didn't start doing that until I was in my 20s. I wish I would have started much younger. Like really trying to have good credit and things like that because I just didn't think about it when I was young. But I don't know about putting kids on there. I'm kind of at a, I don't know. I don't think I would personally, just because I think like you a little bit more. They need to learn how to do it.
So, yeah, and I have like that whole thing because you also said like that you wish you had learned about it younger, and maybe that's a way to teach them about it. I mean, it is a really good credit hack, guys. Like if you have a spouse and that person has a lower credit score and you want to add them to your as an authorized user account, like that's a quick way to get it done. That Experian boost with reporting your utilities also helps. Yeah, but I don't know. You stumped me on that one. I've got to think about it a little bit more. So Gon's fan band says, when is it worth it to refinance? So my rule of thumb is if you're going to be in the house for longer than 4 years and you're going to save $200 or more, right? That means you're going to break even well on the cost of refinancing and you're going to save some money. So, okay. So Miguel says he added his wife as an authorized signer on one of his old cars. In less than a couple weeks, her score went from 756 to 790. So, yep, those are common results, guys. And definitely something to think about. I don't know. I'm so weird when it comes to money, just so you guys know. I definitely think that we should be educating our children on money and finance. I think that's something I wish I had learned. But it's like, I do feel like learning the hard way permanently cemented some of those things in. But then I've met lots of people who didn't get the right foundation, and now these like lessons have become like a lifestyle choice. And so it's hard for me. It's like why Dave Ramsey's so popular, because people like got into terrible debt, they were punished by their debt, and now they never want to use credit again. So I'm like so torn on that. I don't know. All right. So let's see. Del Knight says, hey, Lizzie, just wanted to say thank you for your help last week. Your channel is criminally underrated. Woo! Thank you. I agree. I'm heartbroken as a teacher who is priced out of the market. Oh, girl, I'm so sorry about that. Did we just get a super chat? Shit. How can I see this? Oh, Avner, thanks for all the great information. Oh, thanks, dude. Thanks, dude. Appreciate the super chat.
That's cool.
Okay, so we have like a legit success story from a teacher. Do you want to tell them about our good friend, our teacher? We're not going to say her name because we have to protect people's privacies. Right. But Like, how did you help her find the right property?
So, well, first of all, we needed to get a little bit realistic about what she was looking for and what would work for her situation. So we looked at many properties. We ended up with a condo at first, and then, as you know, it fell through. So that was...
Well, let's talk about the price point, right?
Okay.
So, like, a lot of times people come in, the average purchase price in Phoenix is $375,000, okay? I think it might even be higher now, but that's what I remember off memory. And so they go, well, I need a house that's $375,000 to $400,000, right? And so it starts there. So, right, like when you said she had to reset expectations. So sometimes it means that you're buying a property as what we call a stepping stone. Okay, so it's not the property you're going to live in for a long time, but it's something to get your foot in the door. And so, like, a really great way to do that, especially in Phoenix, is through a condo and sometimes a manufactured home, a patio home, a townhome, right? You are going to pay higher slightly association dues, but it's a way to get your foot in the door, right? So that was step one, right? Just realigning the pricing expectations.
Absolutely. So once we had that kind of in order, we were able to zone in or hone in on what she, where she wanted to be. She has 4 little children, and so we had to keep them within the same distance for school. So that was really important to her also, being teacher education.
So location was like absolutely non-negotiable,
Right.
right? So we have to figure out price, location's non-negotiable.
So knowing the area better, there were a couple little bit out of her district that she was wanting to be in, but we were able to find something, and it was actually a single family home, and got her back under contract. And she's also contingent too, so she's trying to sell her home at the same time, her first property. So we close on next week.
Yes. So Mocha Sista, thank you, honey. Thank you again for the super chat. Just so you guys know, all this money goes to charity. I really appreciate you guys donating it, and I just want you to know that it's going to make the world better. Okay, so just to answer your question, honey, because I really want to make sure that you get like some solid tips on this. Like, what would be your next best thing? So if this is not the dream home, what can you find in the area that you're looking in, or maybe open your scope for like what's available for a townhome, patio home, even look at manufactured homes. Guys, newer manufactured homes are so beautiful. There's entire YouTube channels that have literally gone down wormholes with, right? That show you how beautiful they are.
They have granite.
Seriously. Yeah.
And quartz.
There you go, guys. So be open-minded to the type of properties. Sometimes even going further out, like I know the outskirted towns, if you're willing to drive, have lower cost of living, right? And lower price points. So I know like Casa Grande's a good one.
Maricopa, Buckeye, any of the Wickenburg.
Okay, Wickenburg. No, but there's that other one that Waddell.
Oh, Waddell, yeah.
Waddell. Okay. You can tell I'm not a realtor. Okay, so somebody asked this question, and it's in here somewhere, and I went to grab it for you, but they asked, like, what's the best part of being a real estate agent, and what's the most challenging part?
The best part would be, in my opinion, is giving keys at the end and seeing their happy faces. Like, I know that's so silly, but to be honest, like, overcoming all the obstacles to be able to get them through to the finish line and have it all work out in the end is just amazing. It's an amazing feeling to be able to help somebody do that.
Yeah, you guys, buying a home is like the second most stressful short-term event you'll have in your life, and first is death of a family member. So let me tell you, it's high stress, and there's so many obstacles right now. Like, I mean, you're competing against at minimum 14 people, like she said, and so I mean, I imagine the worst part of your job is like disappointing people.
Yes.
Anybody in sales, you guys, I mean, well, 90% of salespeople, and I'm just making up this stat, we're people pleasers, right? We got into this industry because we love helping people, and it's like our favorite thing to do. And so letting you down is by far the worst part of the job.
Absolutely.
The worst part of the job.
Yeah.
The other thing is dealing with unrealistic people. Like seriously unrealistic. I had a guy, I think I told you this. He literally is like, hypothetically, if I bought a vehicle, how would this impact my home loan? So then I go through like, oh my God, it can impact your credit score. We're going to have to verify all of these things, right? And like at the end of it, you know what he says to me? well, I guess you're going to have to do your job because I just left the dealership. And I'm like, listen, asshole. You should have just told me about the car from the beginning and saved me the long hypothetical, and I could have just gone to work. I hate that part about my job. Like, I literally was watching White Lotus. Have you seen that show?
No.
We also
It sounds fun.
Oh my God, White Lotus is about these like hotel workers that deal with like upper class white America. And it's just like the crazy things that people say, but they say these things, believe it or not, to anyone in service industry. So that's also my least favorite thing about not being a realtor, but being a loan officer.
Yeah. I guess that would, yeah. So my least favorite thing would be, honestly, is not being treated like a real person sometimes. So,
100%.
yeah.
Yeah. I think that people think that in our profession, we're just like out there making like all this money. You guys, I literally talked to Stephanie and she's working 12-hour days. 12-hour days, 7 days a week, showing like, I think she's like, yeah, I just showed this client 60 properties in the last, she literally just told me this story. I was like, girl, but that's what it takes right now. And people think like, oh, she's just like raining in the cash, because
No.
she's a successful real estate agent. So lots of things there. All right. So, okay. So John Adams asked about rates. Dude, I think interest rates are going up. Like I said, keep your eye on what's happening with inflation. Bad unemployment numbers, typically good for rates, but if they talk about them the same time as inflation going up, it's not going to be good, right? So inflation, biggest thing to watch. Interest rates going up in the long run. What are my thoughts on OpenDoor? They just actually went public. So did OfferPad. And, I don't know how I feel. I knew one of the agents that started OfferPad, and so to be very honest, I'm like super stoked that somebody that I know like had a company that IPO'd. I think it's super awesome as an entrepreneur. In general, though, I don't know. I think that they've made the real estate space, they've given another solution to, the real estate community and to clients. I don't know how sustainable it is because oftentimes they're buying properties at a loss. And so I don't, I'm not behind the scenes. I don't know what their long-term projections are. To me, it seems unsustainable. And I don't know 100% if like these companies or like the Renaissance homes that are buying 1 million of rental properties, if that's going to be like where we see the next correction. I mean, I don't know 100%, but yeah, I don't know. How do you feel?
About OpenDoor? I think it's a good solution. I think that, as a realtor, you can work directly with them to help your clients. And whether you're selling or buying, if you're selling, it's great if, the convenience factor of OpenDoor. But at the same time, usually your highest yield will be on the open market. And then on the buy side of things, actually, if your realtor helps you find those, a lot of times in this market, we're getting clients in on OpenDoor homes a lot faster than you would with a regular seller because they'll hold out longer for more offers and multiple offers in that situation. So.
Oh, and then people like get tired
Yes.
of waiting.
Yes.
Yeah, and I often find they're easier to negotiate with. So like we have one right now where we're having a delayed appraisal and like there's like zero urgency on the other side because there isn't an actual seller that needs to move. And you're dealing with like customer service people, and we all know how that can go sometimes. So, but it works in your favor if you're the buyer, not in your favor if you're waiting for repairs, though.
No.
I do find it the same lack of urgency.
It applies
like,
across the board.
Yeah, it's like, oh, by the way, those repairs aren't going to be done. Okay, well, because that's now going to cost me to extend this person's rate and all these things. And they're like, okay. It's like, no, I'm telling you, this is a bad thing. Too funny. All right, so let's see. What's the average debt to income ratio percentage allowed to still be able to be approved? So this is kind of tricky, guys. So it depends on the type of loan that you're buying, really, and what's approvable through the automated findings. So I've seen people qualify, truthfully, with as high as like 60% DTI, depending on how much assets they have and, how much consumer debt they have, what percentage of money they're putting down. Most people will qualify under 45%. On a FHA loan, it's under 57%. I mean, if you're wanting to know if you're going to be house poor or not, like you should want to keep your house payment like no more than 28%. of your overall income. But generally speaking, it's whatever the automated systems will take. Yeah. Do you get asked about DTIs as a realtor?
I do, and I direct them to you.
That's my favorite thing ever. Okay, guys, we got 10 minutes left. Put your last minute questions here. I mean, I literally missed so many. I'm going to try to go back to get some of these. Let's see here. God, guys, never mind. I'm like so shitty at this. What's the craziest home buying experience in 2021 for you?
The craziest home buying experience.
I can't believe this did not come off the top of her head. We were literally just talking about this one.
I know, but we already talked about that one.
I know, but they haven't heard it.
Okay, so, wait, what are you talking about?
Okay, so we had this client that was relocating here from another state, and they applied with a job offer letter. And then literally, you guys, when we went to close, they literally sent me a paycheck stub with a check on it. And I was like, okay, so I thought, well, maybe it's a mom and pop type small business. I'm like, I need a payroll ledger because I got like a personal check. No shit. It was like, they typed out like what taxes and all of that would be and then literally pasted it with paste tape on their personal check.
And Xeroxed
it to me as their condition. So that is like literally the most outrageous thing that has ever happened to me in home loan history. Like,
no, well, it wasn't even just a strip. I think weren't the numbers cut out individually, or am I remembering that wrong?
No, yeah, it was like literally, it was so bad. But you could literally see the Scotch tape, and I was like, what is this?
That won't work. Yeah, don't try that one at home.
No, guys, no. Yeah, so I generally don't. I mean, the weirdest things are like lifestyle choices. People buy cars, they switch jobs. Yeah. You know.
For me, I think when you're on the buy side of things, you can see a lot of things because you go in a lot of people's homes, and so I have seen it all. We'll say that. I walked into one that was a VRBO, I guess, and the guy hadn't checked out yet, and the master bedroom was. We had to shut the door and just turn right back around because he was asleep in there, passed out. Yeah, it literally happened to us. I don't know if I'm allowed to say that.
So when I was first buying my first home, you guys, it was like in 2006, where like basically it was kind of a market like this. Like if you had a shithole property, you could sell it for top dollar. So I literally walked into this house, opened the front door, and somebody had stepped on a cockroach, like stepped on a cockroach right there, and didn't even wipe it up, just like left it there. But then it gets better. All of their dirty laundry everywhere, and then we go into the bathroom. There's a piece of poop in there. And I'm like, do they really want to sell this place? And I was so offended. I'm like,
oh, I'd be offended.
I was like, didn't they know we were going to be coming over? Like, yeah. So, and that stuff literally still happens. Like, we will see people's appraisals, and I'll be like, okay, note to self, if you really want to get top dollar for your appraisal, please clean your house.
Yes.
Okay. All right. What do I think interest rates will do once the Fed stops tapering? Okay, so this is a hypothetical hypothesis. Thank you, Grayman. Guys, I mean, I think it's going to be really telling. I mean, lots of experts are saying that they're going to jump up at least 1%, so they're expecting interest rates to be in the high 3s, low 4s. I've seen some people speculate as high as like mid 4s. I mean, you know, we've started seeing them already taper their asset purchases, and there is some appetite for mortgage-backed securities. Mortgages, I mean, as people get off of forbearance, I think we'll see a lot more investors want to purchase them. Mm-hmm. Interest rates do have to come up, though, in general, because we have to curb some of this competitiveness in the real estate market, or houses won't be affordable. So, I mean, that's just my general professional opinion. I also do think for those people that are, you know, really worried that they're going to be priced out of the market, I do think that they're going to come up with longer terms, or they're going to be more creative with the types of terms. So back in the day when this happened the first time, they had shorter term arms with way significantly lower interest that help people get into properties. And they also extended the mortgage terms out 40 to 50 years. So I do think that there's going to be some reprieve. So, that's the best guess that I can give you guys, because obviously, like, I could not have predicted the last year anything that has happened, I've been in the mortgage industry now 19 years. So, this is just the best information that I can provide you with. What I will tell you is that I'm going to continue to be here weekly. And if you guys want to sign up for my newsletter to really get like some nerdy information twice a month, you can do that on my website at lizziehoeffer.com. And I'll try to do my best to break this down for you guys. Awesome. Alrighty, guys. Well, I appreciate you guys for tuning in. I think this was our most popular live show. So I appreciate you guys. We'll be back not next week, but the following week. So next week I'm actually out on vacation. I'm doing a mastermind, but I'm going to have 2 really awesome videos for this channel. So appreciate you guys for tuning in. Please don't forget to give this a thumbs up, and whoever gave this a thumbs down, WTH, man. Like, so don't forget to share this with friends, and don't forget to hit that like button. Thanks, guys. Appreciate you.